Meta shares continue to decline, and I really wanted to opine on this because I do believe that a great opportunity is starting to present itself. So that's what we're going to talk in this video. But guys, I got to remind you to smash that like button and let me run that intro. What's up, guys, and welcome back to the channel. Let's dive right into this one. So you can see here that as of close at the recording of this video, Meta is now down 61% year to date, and that's absolutely nuts. And what I want to talk about in this video is that in their Q2 conference call, Meta's management, Mark Zuckerberg, Sheryl Sandberg, etc., discussed their top 3 biggest challenges. And before I get into those challenges, I do want to remind you guys, if you are an owner or a shareholder of these publicly traded companies, the very least that you should be doing is reading their transcripts, their quarterly transcripts, every quarter, because you get a really good insight as to what's happening with the company. Now, before going into their 3 main challenges, they did discuss a couple of changes that they're making to the Facebook platform and to the business as a whole. So one of the things that they're doing here is with Facebook, one of the main transformations that they're doing is they're relying more on AI recommending content that they believe that the users will find interesting across Facebook and Instagram, even if you don't follow those particular creators. And so you guys know that YouTube does do that, and it works really well on YouTube. However, for me at least, I noticed this change with Facebook, and it's just kind of become a little bit spammy because they're not really sharing creators. They're sharing like other like public type corporate accounts or corporate news accounts and that kind of stuff, or like clickbaity type stuff where like they're trying to get you to click in and then you follow like this trail of clicking things. And so it's just weird. And I went back onto my Facebook app as I was looking at this, and it's like almost like every 4 items that are shown to me in the Facebook app are now this like AI generated content. It's just very weird. It's making Facebook seem very spammy, and I just don't want to use it as much anymore. So I think it's backfiring a little bit. But notice that Facebook is saying that right now around 15% of the content in a person's Facebook feed and a little more than that on their Instagram feed is recommended by their AI. And on Instagram, it's not that much of an issue, I find. I think it's more of an issue on Facebook because I go on Facebook just to see what my friends are posting. And so when I'm getting like all this weird like AI recommended content, it just makes me not want to use Facebook. Now, they expect that these numbers are going to double by the end of the year. So I think they're just going to push Facebook, at least the original Facebook app, into more obscurity. I think it'll be fine on Instagram. And they said that since we're already efficient in monetizing most of these formats, this should increase our business opportunity over the period as well. And I don't disagree. They're probably going to do it. Now, Reels engagement is already going quickly. And they shared last quarter that Reel made up 20% of the time that people spent on Instagram. And so that's very exciting because you want to take on TikTok as much as you can. And I do believe that Reels is winning. I think the one company that's not doing so well with their short sort of content is YouTube with their YouTube Shorts. I just don't think that it's taking off the way that Reels has taken off. I think Reels on Instagram is going to be the main challenger to TikTok. And other than that, I think YouTube sort of fails in this area. And so here's a big sort of challenge for YouTube now. What happens if TikTok allows you to start making longer form content? Does YouTube start to go away? So that's a bit of a challenge for YouTube and the creators to really start thinking about, should you open up a TikTok account just to make sure that you are getting the same number of overall views and exposure that your content should be getting, or at least has previously been getting. And that goes into the number 1 challenge that Meta is facing, which is TikTok. They said that one near-term challenge is a growth of short-form video. Reels doesn't yet monetize at the same rate as feed or stories does. So in the near term, the faster that Reels grows, the more revenue that actually displaces from hiring monetizing surfaces. So in the near term, you could expect Facebook's or Meta's revenues overall to decline or not grow as fast. And so what they're saying is that our work on ads monetization efficiently for Reels is actually making faster progress than they'd expect. So the bottom line is that they're on track and they're going to try and push through it, but there's going to be a bumpy road ahead, which could really continue to tank the stock. So be careful if you're a Meta owner, because you could see some short-term sort of variability in the revenue right now. The second challenge that they're addressing is the Apple iOS changes. And essentially what they're saying is that their approach to addressing this is growing a first-party understanding of people's interests by making it easier for people to engage with their businesses on the Meta apps, whether it's through business messaging, shops, or new ad products. Additionally, they're really focusing in on AI to help them enable better sort of like personalized ads. And so overall, I think that they do have a lot of work to do here, but I think sort of Meta gets around this one. I don't think the Apple iOS changes are going to impact Meta as much as people originally predicted that they will. The third challenge is slowing ad spend due to a slowing economy, and that's kind of what I've been harping on for the last little while. And so, periods like this are when marketers reevaluate their budgets and are become even more focused on finding the highest performing advertising. I do believe here's where Meta wins, because some of the best performing direct advertising is on Facebook and Instagram. And so they might actually get a bigger piece of the pie in this environment. However, if the pie is shrinking, their revenues, of course, are going to go down. Now, they mentioned those as their top 3 biggest sort of like obstacles or challenges in this environment. But there's one challenge that's conspicuously missing, which I would say is a seeming failure of their investment in the metaverse. And so what do I mean by that? Well, if you remember, in the summer, Meta was a bit of a laughing stock as they tried to demonstrate sort of what they have in store for users. And they kind of were just owned online when they shared this photo. And here's a Twitter user who's saying that the metaverse segment lost approximately $18 billion since 2020. And so the question being raised by investors here is, what exactly are you investing in if you're losing this much money and you don't have much to show for it? And so I would consider that a huge challenge that they really need to discuss. And they actually did discuss it on the call. So you can see here that Mark Zuckerberg described the metaverse as a metaverse technological wave that they're currently building. I circled the word wave because they're considering this still a huge opportunity. And so Zuckerberg continues to be very bullish on the metaverse and is committed to spend billions more to continue to develop it. And here are his words: "I feel even more strongly now that developing these platforms will unlock hundreds of billions of dollars, if not trillions, over time. This is obviously a very expensive undertaking over the next several years." That's actually kind of crazy, because effectively what he's done here is he's doubled down on the metaverse. And so as investors, since we're not really seeing the payoff right now, the best thing that you can do in your valuations, and what I'm doing in my valuation, and I'll show you later in the video, is not cutting the higher costs in their sort of P&L when you forecast out that P&L. And so that's something to take into consideration, because they're going to continue to face these costs as time goes on. And so they go on to say that the next milestones to look out for are the continued expansion of Horizon, so more costs, their social metaverse platform. The other thing that they did is they just launched their avatar store with digital clothes from leading fashion houses. And so if they're unlocking trillions of dollars of revenue, I think what they're saying is that people are going to go take their avatars and buy digital clothing with it. I just don't see trillions of dollars of return right now. And so I'm probably just a little bit misinformed here. I'm not technologically savvy with respect to the metaverse. And so I might necessarily just not be seeing it. I know Wall Street's not seeing it, and so let's see what they have in store. And they did provide us a little bit of a glimpse into what they might have in store. You can see that they said that on the hardware front later this year, they're going to release Project Cambria, which is a reality mixed high-resolution color mixed reality device. And so they did say that they expect people to be pretty blown away by this. We'll see what it looks like. Now, because the Meta stock has been losing so much ground with respect to their share price, where do they stack relative to the other opportunities that we track here? Well, you can see here, this is the tracker that the Patreons get access to. Notice that Meta has become so inexpensive that it's now in the top 20 of the cheapest opportunities on the tracker. And its current share price of $133 per share is approximately 60% of its intrinsic value. So it's becoming very cheap. And just looking at the valuation, I'm using a free cash flow per share net valuation. The net means that it's a net of stock-based compensation. So I take into account the dilution of the shares expected in the future. I'm using a lower multiple of 17.5 times earnings. And I'm giving them back $17 of excess capital because they just have cash sitting on their balance sheet. What they should be buying back shares in this environment, and I hope that they do it. They're trading at around 60% of their intrinsic value with a valuation of $226. And in other words, they're trading at 13.5 times next year's earnings. So I think Meta is getting really cheap in this environment. And this is what I meant earlier about being careful and continuing to forecast out higher costs as a percentage of revenue because they're continuing to invest in Meta. And so I'm forecasting total costs as a percentage of revenue at around 73%. And so I'm not giving them any credit for the cost-cutting measures that they've implemented thus far in 2022. And where does that 73% stack up against performance in fiscal year 2022? Well, you can see that the total cost as a percentage of revenue for the 6 months ended this year is around 71%. So they're running a little bit leaner than what I'm giving them credit for. But as you can imagine, if things turn around, if revenue does continue to increase, they might increase expenses as a percentage higher than the rate at which revenue is increasing. And so you can easily get to that 73 to 75% range. And so it's better to be careful than to overvalue the company in this environment. And so the question is, how do you get access to that Meta model that I just showed you? Well, you can get access to that Meta model at the lower tier of the Patreons. And if you want to join us for an Epic Live presentation, you can join us at that upper tier. Now, the other thing that I do want to point out to you guys is that approximately 80% of the watch time on this channel is from people that are not subscribing. So if you like the content, please consider subscribing right now. Now, the other thing is the number one cheapest opportunity on that tracker is Alibaba. And I recently released a video on Alibaba discussing the opportunity, which you can get to right here.